Something isn't quite lining up. Over the past few days, markets have behaved as if the situation is improving, and yet the situation hasn't improved at all. The ceasefire is fragile, negotiations have stalled, and military positioning has not meaningfully changed. And yet Bitcoin is holding near local highs. Equities are pushing higher towards all-time highs themselves. And oil, after briefly surging above $100, has started to fall. Now, normally that combination only appears when risk is decreasing, but right now risk hasn't gone anywhere. So the question is, what exactly are markets pricing right now? Because by the end of this video, you're going to see why the answer to that question might be the most important signal in the entire market. Over the past 24 hours, markets have done something very specific. They've stopped reacting to what is happening now and started reacting to what they believe will happen next. Oil is no longer accelerating higher despite continued tensions in the Middle East. Equities are rising even as negotiations remain unresolved, and Bitcoin is quietly pushing back towards recent highs. Now, taken individually, that might not seem all that unusual, but taken together, it creates a very specific picture. A market that's no longer trading reality, but expectation. And in a moment, we're going to break down exactly what that expectation is and why it may be completely wrong. To understand where we are, we need to go back a few days. When the ceasefire was first announced, markets reacted instantly. Oil dropped sharply, Bitcoin surged past 72k. Equities rallied and have continued to rally, with the kind of confidence you only see when uncertainty disappears fully. Because the narrative was pretty simple. War risk is down, liquidity expectations up, risk assets move higher. But there was a problem. That narrative was based on something temporary. The ceasefire was never permanent. It was a short-term agreement dependent on negotiations that has not yet been fully resolved. And over the weekend, those negotiations began to break down again. Now, this is where things become slightly unusual because normally, when a bullish narrative breaks, markets reverse quickly and aggressively. But this time, they didn't. Yes, there was volatility. Yes, Bitcoin did pull back. Yes, oil did surge. But then everything stabilized. And that is the part most people are missing, I think, because that stability tells you something very important about what markets are really thinking. We'll come back to that in a moment, but for now, I want you to understand that if markets believe things, you don't look at the headlines, you look at oil, because oil reacts to real-world constraints. Supply, logistics, and risk, some of the key factors for oil to move higher or lower. When escalation fears peaked, oil surged above $100. That move was immediate, convincing, and entirely logical. But what matters is what happened next. Because oil stopped rising, it actually stabilized, and then it began to drift lower. Not collapse per se, but it definitely lost momentum to the upside. And that is a signal, in my opinion. Markets are no longer pricing a sustained disruption with the same confidence, and that shift has a direct impact on everything else. That's what we haven't talked about yet: liquidity. Because oil is not just an energy market, it's actually a signal of inflation. Higher oil feeds directly into higher inflation. Higher inflation, as we know, forces central banks to remain restrictive, and restrictive policy reduces liquidity. Liquidity is essentially what drives risk assets, including Bitcoin. So when oil stops rising, markets begin to price in a slightly different environment. Not easy, but easier. And that is enough to support assets like Bitcoin, which have been steadily rising, as we've seen, which, as it turns out, is rather fond of liquidity. Bitcoin behavior over the past 48 hours has been quietly revealing. It dropped during the initial escalation, then found support, then began to move higher again. Not aggressively, but pretty steady. And that kind of move is often overlooked because it doesn't feel dramatic, but it does tell you something pretty important. Sellers are no longer in control, even if buyers are still feeling pretty hesitant right now about piling back in. And that hesitation links directly to something happening in equities. That's something that we need to talk about next. Because while everyone is focused on crypto, the real signal might be coming from somewhere else: the Nasdaq. The Nasdaq is currently on a strong upwards run. It's actually only 500 points away from all-time highs right now. Despite all the geopolitical tensions, the rising oil volatility, and the unresolved negotiations. And obviously, that shouldn't happen, not in this environment, unless markets are doing something very, very specific. They are looking past the present and pricing in the potential future ceasefire. This is why the earlier stability matters. Markets didn't collapse because they are already anticipating a resolution. This creates what we call a gap in the market, not just on the chart, but in expectations. Markets are here, reality is here. And in between them is the assumption that the ceasefire is going to go through. That assumption is that the tensions will ease, that negotiations will resume, that stability will return. But none of that has actually happened yet, which puts us in a bit of a pickle. Another reason this move feels controlled is the positioning that we're seeing. This isn't just panic buying, it's not purely short covering. Institutions are participating, but pretty cautiously. Flows are returning, but not accelerating, which is usually what happens when people think they're right, but they're not entirely sure yet. And this, of course, is the risk. Markets are pricing in an outcome, but that outcome has not even occurred yet. Negotiations may resume, and they may succeed, or they may fail again. And if they fail, everything currently being priced in has to be unwound. As we know, this is often called buy the hype, sell the news, which happens a lot in crypto. If this happens, oil will move higher, inflation expectations rise, rate cuts get pushed further out, equities pull back, and crypto will very likely follow. Exactly as it has done before, by the way. So right now, markets are not trading reality at all. They are trading probabilities. The probability that tensions will ease, that negotiations will return, that stability will follow. But probability is not certainty by any means. And until certainty exists, everything you're seeing right now is essentially a bet. For now, Bitcoin is holding, oil is stable, and equities are pushing higher. But all of it depends on something that has not happened yet. And in markets, that is usually when things get pretty interesting. Thank you for watching.